when you have these big new buyers, they have to buy the asset from every short-term seller. And for gold, that took 4 years. For Bitcoin with ETFs, we're in year 2. And what that tells me is that Bitcoin is going to follow gold to Valhalla. Bitcoin has outperformed gold over the last year, and we're all freaking out, right? I know it's underperformed year to date, but you just zoom out a little bit. But I agree, people freak out. That's your opportunity.
Matt Hougan, CIO of Bitwise, is connecting the dots between gold's historic bull market and Bitcoin's next explosive leg higher. And the parallels are striking. He argues that what we're seeing in Bitcoin today is the same slow-motion supply exhaustion that drove gold's price surge after 2022. In gold's case, the catalyst was geopolitical. When the US seized Russia's assets, central banks began aggressively reallocating to hard assets. That wave of sovereign buying started quietly but compounded for years before gold went vertical. Hougan sees the same dynamic forming in Bitcoin's ETF era. Spot Bitcoin ETFs are now purchasing 2 to 4 times the net new supply entering the market each day, creating an unavoidable supply-demand imbalance. The reason Bitcoin hasn't gone to the moon yet, he says, is simple. It's still early in the 4-year accumulation cycle, just like gold was in 2022.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
Just like who are the sellers of gold? It's actually retail investors who own gold jewelry. That's like who's been selling gold into this share. They probably had it for 50 or 100 years in the family, and the price is up, so they're selling it. You see the lines of people selling it at stores. So it is existing holders, but I think the lesson from gold is just it'll exhaust. Like, it's not infinite. At some point, that supply constricts and the price goes up. Bitcoin's done pretty well since ETF launched, up about 160, 170%. But we haven't yet reached that exhaustion. So when will we? I don't know. But I do know it's coming, and that makes me want to buy every dip and hold forever. Gold is telling you that the store value market is bigger. If you continue to think Bitcoin will get a larger share of that market, that's bullish. When I started at Bitwise, if Bitcoin matched gold, it was getting to like 700,000. Now, if Bitcoin matches gold, it's getting to like 1.4 million, right? That's positive as well. So I see only good stories out of this gold bull run. I think we should all be happy about it and cheer the boomers and wait our turn. If you look at the data, the buying skyrocketed in 2022 when the US seized Russia's assets and central banks were like, we have to buy something else. And then it stayed flat from 2022 to 2023 to 2024 to 2025. But no one talking about the fact that central banks are driving the price up says that it's been happening for 4 years, and we've only gone rocket ship in the last 4 months. And then it clicked for me that the thing I should actually point out is that's what's happening in Bitcoin. Because the other thing people are worried about is ETFs have been buying 2, 3, 4x the net new supply of Bitcoin. Why hasn't the price gone to the moon? And the answer is it's just doing the same thing, which is when you have these big new buyers, they have to buy the asset from every short-term seller. And for gold, that took 4 years. For Bitcoin with ETFs, we're in year 2. And what that tells me is that Bitcoin is going to follow gold to Valhalla. It's just a matter of time. As long as we have ETF investors continuing to allocate, they will wear down the sellers eventually. And then there'll be headlines like, what's driving the price of Bitcoin to 500K? And the answer will be ETF purchases. But it will actually be a 4-year story, not what's happening right then. If you look at the data, the buying skyrocketed in 2022 when the US seized Russia's assets and central banks were like, we have to buy something else. And then it stayed flat from 2022 to 2023 to 2024 to 2025. But no one talking about the fact that central banks are driving the price up says that it's been happening for 4 years, and we've only gone rocket ship in the last 4 months. And then it clicked for me that the thing I should actually point out is that's what's happening in Bitcoin. Because the other thing people are worried about is ETFs have been buying 2, 3, 4x the net new supply of Bitcoin. Why hasn't the price gone to the moon? And the answer is it's just doing the same thing, which is when you have these big new buyers, they have to buy the asset from every short-term seller. And for gold, that took 4 years. For Bitcoin with ETFs, we're in year 2. And what that tells me is that Bitcoin is going to follow gold to Valhalla. It's just a matter of time. As long as we have ETF investors continuing to allocate, they will wear down the sellers eventually. And then there'll be headlines like, what's driving the price of Bitcoin to 500K? And the answer will be ETF purchases. But it will actually be a 4-year story, not what's happening right then. Bitcoin has outperformed gold over the last year, and we're all freaking out, right? I know it's underperformed year to date, but you just zoom out a little bit. But I agree, people freak out. That's your opportunity. Bitcoin is slowly marching up the institutional stack. If we were here 5 years ago, you'd be asking me like, will family offices buy Bitcoin? Now they're all buying Bitcoin, right? And there are few endowments, and maybe there's 1 or 2 sovereign wealth funds, and then traditional central banks are 0. But we've been marching up this institutional stack for the last 10 years. I see no reason why we won't get all the way to the top, which is central banks buying it. I think it'll happen. It's just a matter of time for me. Yeah, sure. I mean, so what we look at here is the most basic drivers of Bitcoin's price, which is you have the new supply issued every year from the blockchain. It's 164,000 Bitcoin per year. And you can see it from the time ETF launched to the time we wrap this report on the right. And then you have the number of Bitcoin being purchased by public companies and spot ETFs who've been the marginal buyers of Bitcoin. This is why I said that this is not a crypto native driven market right now, that other entities are involved. And as CIO, I can tell you the complex math says that the numbers on the left are bigger than the numbers on the right. And that's why the price of Bitcoin went up. And the point I was making in the memo is this will persist. ETF purchases are going to scale over time. Every ETF in history scales over time. So we're going to have this persistent supply-demand imbalance in Bitcoin. That means that existing holders have to sell to make those 2 columns the same. And they'll only do that if the price goes up. And eventually those sellers will be unwilling to, and I think the price will skyrocket. Another way to conceptualize what's going to happen, if you go back to that last chart, that in every other asset, the columns on the right are bigger than the ones on the left. So in stocks, that's like, 60-40, 75-25. In bonds, it's like 90-10, right? So eventually those things on the right have to take over from the things on the left. And I think the price will go up substantially as they do that. And then on the ETH slide, the story is actually even more pronounced on ETH. I know the issuance of ETH is a little bit different, but if you look here, 1 million new ETH, 8 million purchases by spot ETFs and public companies. Again, these may be the only slides you need to look at to understand the long-term outlook for Bitcoin and Ethereum.
Hougan's core thesis is that ETF-driven institutional demand will eventually overwhelm short-term sellers, forcing a massive price repricing event. Every ETF launch in financial history scales over time, and Bitcoins are no different. As traditional allocators, from family offices to endowments and sovereign wealth funds, climb the institutional stack, liquidity pressure will build. Existing holders will only part with Bitcoin at higher and higher prices. Hougan calculates that if Bitcoin were to match gold's market capitalization today, the fair value would approach $1.4 million per coin, double his earlier projections. Meanwhile, Ethereum's setup is arguably stronger, with spot ETF inflows already exceeding new issuance by a wide margin, setting the stage for structural scarcity. This isn't a short-term speculation story, it's the formation of a generational asset repricing, playing out gradually before the inevitable vertical phase that defines every historic commodity supercycle.
For what it's worth, Polymarket is not optimistic. It thinks we're going to be shut down until at least like mid-November if I'm looking at the right Polymarket. They're probably multiple, but the one I'm looking at puts a 50% plus odds on after November 12th, which is a while. It's crazy. It's such a commentary on what's going on now. My view of the Clarity Act is that the market has priced in it not happening. Mm-mm. And the reason for that is that you have the government shutdown and you have the Democrats pushing against the Republican version and a big conflict there. And I suspect there's a chance it won't happen. But I think if it does happen, it's a major positive catalyst. So I think it's important to think about where the market is versus the probability. If it truly fails, there's probably a little bit of downside. But if it does happen, I think it's a huge catalyst, particularly for ETH Solana on down, more so than Bitcoin. But generally speaking, it's one of the things that could drive us to new all-time highs. And the first is to fade his tweets, right? Because it doesn't end up being as bad as the initial tweet happens. That's what happened a few Fridays ago. And the second is to count on them delivering on their core promises on crypto. They've actually done that pretty consistently. And so I suspect that 19% bid on Polymarket is a good bid to hit. Like, that's my guess. My guess is that will go up by the end of the year. I could be wrong, but I think my personal read of the probability there is that it's higher than 1 out of 5. I think they got double crushed. They got crushed by FTX and they got crushed by the meme coin collapse. And maybe they just folded it in after Millennium coin jumped.
And NFTs. Don't forget NFTs. NFTs are a big one.
And NFTs. I mean, that's 3 strikes. You can only get wrecked so many times before you fold up your tent. I think the retail that's been here is TradFi retail, right? The retail that's been here has been in ETFs. The retail that's been here has been in MicroStrategy and other DATs. I think it's been a different retail. I do think that retail demand is robust and continuing. But I think crypto native retail just got, as you said, or as we just covered, triple wrecked by FTX, meme coins, and NFTs, and maybe just isn't that robust in this cycle. But that doesn't mean retail's not here. It's just a different retail. I think the mistake people make when they look at something like Polymarket is thinking it could be 5 times as big. I think it probably could be 1,000 times as big. Right. I think that's the scale you're talking about. I think you could find retail investors allocating as much to Polymarket as they do to traditional stocks and bonds. I think you could see it tackle huge chunks of the options infrastructure and the futures infrastructure. There's no guarantee it will do that, but I think it could do those things. And so infrastructure plays like Chainlink, if they have 1,000x increase in demand, I think that's where it gets interesting. I liked Robinhood. That was another good idea, Rob.
For seasoned investors, Hougan's message is clear. Ignore short-term volatility and focus on the macro architecture of adoption. Bitcoin has already marched up the institutional hierarchy, from family offices to public companies, and is now approaching central bank-level consideration. ETFs represent the bridge for this transition, providing the regulatory and liquidity infrastructure needed for large-scale capital allocation. Retail capitulation after FTX and meme coin collapses has given way to a more sophisticated, trad fee-driven base. Investors who buy dips, not dreams. As Hougan emphasizes, the long-term trajectory mirrors gold's path. Years of silent accumulation before a rapid repricing event that shocks the world. The takeaway? Bitcoin's ascent to Valhalla, as he calls it, is not a question of if, but when. The market's slow burn of supply exhaustion ensures that when the breakout comes, it will be both unstoppable and historic.